Good morning. And thank you for making the time. And we are just ahead of lunchtime, so we'll make sure we get work up a nice appetite for you with this session. My name is Stephen Miles. As introduced, I'm the CRO of FYNXT. We are a global fintech company that provides digital front office and middle office technologies. Um, and we try to make sure that we help our businesses really build uh, a brokerage ready for the digital era, but also with a focus on technology driving business growth. I am excited to moderate this session with an esteemed team of panelists here joining me this morning. And they're going to provide you insights based on their wide range of experiences, skill sets, and immense time within the industry. Our topic is an interesting one. And when I was first given this, I thought, hang on a minute, fail better. I mean, what do you do with a title called Fail Better? Nobody plans to fail, do they? But the reality is, with technology dependence underpinning the success of the industry and every brokerage, I think it's helpful for us to debate the risks, both of the dependency on the technology, but also perhaps in not having the right technology or having enough technology. What's the risk of missing out? So with that, we're going to kind of discuss and debate that during this session. But before I do that, why don't I hand over to each of the panel members on the team here to introduce yourself? Maybe, Tom, starting with you.
Thank you very much indeed, and it's lovely to be here on this sunny day in London, in our minds anyway. So I'm Tom Higgins, and I'm CEO and founder of Goldeye, and we are a technology company. We've been around for 17 years, so we're very well experienced in this space, and we build in three main areas. So we build in liquidity management for FX, CFDs, equities, and institutional cryptos, money management for MAMs and PAMs, etc., and then the risk management tools we have to monitor client risk and see how these naughty people are trading and taking money away from the brokers. And this subject is very interesting to me because I'm a technologist by heart, and I used to be proud to say I was a Teslaer, and now I have to be slightly embarrassed. But what Tesla did, and what Musk actually did with SpaceX as well, was to do things faster and fail faster, because he worked out that it was actually an advantage to do things very quickly that then went wrong, and you'd fix them quickly. And actually, if you can put up with these things that are going wrong quickly, you can get to your final goal much quicker. I mean, NASA used to take forever to do anything because they would never do anything that hadn't been tested for 50 years. And SpaceX went straight ahead of that by saying, we're actually going to use modern technology that will fail. Rockets will blow up, but then we'll just do another one, and they get there much quicker. So it's very interesting whether how this works in financial services, and whether people are happy to accept losing money because you actually make more money in the end because you get there quicker. John.
Fail fast and fail forward, I think is the saying. I'm John Morris, co-founder of FXBlue. We're a fintech provider to most of the big names in the sector, in the FX, and now increasingly the prop sector. We provide web and mobile front end, prop technology, margin engine, and content for MT4 and MT5. Risk is a really interesting topic, and that's what we see reflected in the discussions we have with our customers. And we'll come back to that when everybody's introduced.
Hello, I'm Gil Ben-Hur. I'm the CEO and founder of the Fivers Group. We have founded a decade ago the 5%ers, which is the new age online prop firm. And 4 years ago, we launched Trade the Pool, which is the only true equities, US equities prop firm, Trade the Pool. And hello, nice to be here. By the way, I love the title because one of my hobbies is to fail better.
Better.
I love failing. Okay. It's a really educating experience.
Hi, everyone. My name is Matthew Smith. I'm the Group CEO of EC Markets. If you wanted to see Adam Sayward, who's the CEO of the UK, I'm sorry to disappoint you. He's unavoidably detained, so I've stepped in. I know these industry titans. I've used their products in my history in the market. So I feel a little intimidated sitting on the same board as you guys. I'm not a technologist. I'm an end user, but hopefully I can bring that perspective to this conversation.
Thank you, everyone. And well, I'll just set the scene really quickly, and then we'll get into the first question. So let's just think about this, because over the last 10 years, I mean, almost really tracking back through the entire emergence of the fintech scene, we have seen a seismic but significant shift where we have taken technology, and previously it was really consuming them as tools to optimize, augment, improve, automate. And that's where it sort of first worked its way into the business. And then as we kind of take a step forward, we've moved to technology now, not just augmenting and improving the business, but operationalizing the business. And more technology is supporting the business, making it go quicker, faster, better. And we're kind of moving now to the next logical phase of that evolution, where in the AI fused new normal, we're thinking about technology really being the business. And when we think about it in that context, the front office, the middle office, the back office, everything from how we engage a client, retain a client, how we trade, do business, it's all running on technology. But as we think about then the notion of risk, we need to challenge and think about, what does that really mean? If my business is going to run on it, in the past, failure was an operational inconvenience, wasn't it? It was, a little annoyance that we go and get fixed. But now, if it fails, we have an operational outage. We cannot potentially trade. We may have a brand reputational issue. We may well have a compliance legal issue. So what we're going to do now is really kick that into a couple of subjects, and let's see what the panel have to say. But I'm really keen to see where this goes, because we need to make sure there is a close coordination between the underlying strategy and the business that each part of our business, from a broker trading perspective, wishes to support. So maybe I could just kick off the first question and really just tee it up. So staying with the theme then of technology being the brokerage, do you think fintech to date has increased business risk or reduced business risk? And depending on your opinion, perhaps explain why. John, could we maybe start with you and then go over to Tom?
Yeah, I think it's good to get a kind of macro overview and look at some of the trends that have played into risk, both regulatory and financial. So when we started in 2010, there was principally only one platform, which was MT4, closely followed by MT5, which got traction in the mid-teens. And a lot of brokers grew up on MT4 and MT5 and consequently had revenue risk in a single platform. And that's principally true still today. 2010, TradingView started, now has 100 million users. That's a very big argument, and a lot of brokers want to gravitate towards that platform. They're unable to do that through MT4 and MT5, so they've had to seek alternative platforms. So you get some diversification there. 2012, Topstep started the prop sector, focused on futures, followed by 2015-16, the Fivers, FTMO, introducing a whole new world of trading concept, principally based initially on MT4 and MT5. And then in 2022, in July, CTFC bring a case against My Future Funds, 300 million claim for fraud based on that prop firm implying that the trading was real as opposed to simulated. So that was a significant statement in the market, and that shock possibly was the cause the month later of Apple withdrawing iOS and Android apps from MetaQuotes. And I think that was the first material shock that rippled through this marketplace, with brokers and props realizing that they had revenue risk through what had suddenly become a soft regulator, Apple, MetaQuotes. And so, risk began to take a very tangible form in the market at that point. So this caused a diversification into other platforms. So you've got brokers wanting to use TradingView charts, which they could only do through CTrader or other platforms. You have brokers and props realizing that they've got revenue dependence on a single platform. And then, of course, you have the ability or not to take customers from America in the prop companies. And MetaQuotes decided, probably prompted by their Apple relationship, to stop that. So this has forced a significant diversification. And then the next stage of, if you like, sustainability risk is can I diversify the number of assets that I'm providing to my customer base? And can I do that through a single platform? So this is really the perspective of the market from where we sit at FXBlue. And what we've done to play into this is to develop a front-end web and mobile platform where brokers and props can develop their own identity. They can also put multiple assets in different markets in their single sign-on and so on. And logically, to follow the risk argument through, you should then be able to choose whichever back end you want to attach to that front end, so that you can have one eye on your regulatory and financial risk. And there isn't one throat to choke in terms of who controls your business. So you could have one or more backends connected to a front end. And from our point of view, this is what's important in this market, to give insurance, in a sense, against the risks that are inherent in this market from actual and soft regulators and from financial dependency on a single marketplace. So that's a very broad overview, and I think this is how we see risk in this market and how we're trying to use technology to offer brokers and props alternatives to give them a more sustainable stance going forward.
Yeah, thank you, John. Tom?
Yeah, I agree with all of that. And being an optimist, I'm going to ignore all of that and I'm going to look at something else, even though it's all completely correct. I like to look forward, and technology is an enabler to me, and it allows you to do things in a brokerage that you could never have done before. When I started working, the first brokerage I worked in, they had pads of paper and they would write every single trade they did with the market. The A-book trades they would write in pencil on there, and then they would cross it out and do the next trade, and they would keep the positions written in pencil on this pad. And it got to the point where they said, we were running out of pads and our pencils are running out too quickly, so can we use something else? So then they used the spreadsheet. And this is extraordinary, this thought that you would actually do it manually, on paper, but they did actually do that. And then technology came along and allowed them to be able to keep their positions in real time. And so this technology that comes along can enable things that you didn't even think about before. Things like a prop firm now on the scale that we're getting in retail, you couldn't really conceive the idea of having a simulated market doing millions and millions of transactions every day, moving then into funded, that sort of concept. It just wasn't possible. But what John was saying about separating different parts to reduce your risk is really key, actually. I like that idea, because where we find we're getting a lot of traction is providing this back-end execution part as our level of expertise, where we do our bit, and then other people are writing the front-end parts, the charting parts that all fit together. So you're each doing the bit that you're very, very good at. But as a broker, you can now choose, and you can build a brokerage with almost no technology staff, because you can buy all of these components and use technology as an enabler to be able to enter things that you didn't even exist before. I mean, the predictive markets idea has come up so quickly. I didn't even know the term that long ago. But it's an interesting idea. I mean, it's been tried with binary options and went horribly wrong there. But maybe done in a different way as a regulated thing, it does have some legs. It's really about doing things quickly. And I think as brokers, you have to look at your technology providers not as just a provider, but as a partner. because it's something that you're going to build together, and the right technology partner will build things with you, and maybe you do want to do them quickly and go to market with something that might fail, and then you fix it because you'll get it quicker than anywhere else, and that's actually the cheapest way to do it. So I see it as a big enabler, having learned from the past.
Yeah, thanks. And just to kick that forward a little bit, because John, you talked about technology clearly reducing risk and mitigating risk, which is important. And you touched more on technology as an enabler. That's the two-sided coin, isn't it? So if we have reached a point where technology is clearly important and clearly providing value, are you seeing that brokers now treat technology as core, or are they really still seeing it as a cost center? Maybe Gil? Well,
Well,
it should, but are they?
definitely technology is core, because if we want to deal with the masses and the magnitude and scaling up our business, it must be based on technology.
Yeah.
And as scale come up, more challenges are coming, and then we need more technology. At the end of it, it we need to not to fall in love with technology or to be dependent on the technology. And what need to drive our decision is the business models that we want to apply and the service that we want to provide our clients, and by that define the technology that we're using. But it's definitely core.
Yeah, I mean, it's definitively core. I guess it can depend on what stage of evolution your brokerage is at. If you're just starting up, you're going to get your platform from the most popular platform provider. You're going to get your back office, maybe, your CRM, maybe from Salesforce. And you'll take everything off the shelf. You go to Goldeye for certain technologies, or maybe you use FXBlue's. Is it Adagia? I'm trying to remember the correct name of it, but the sort of front that you can place over MetaQuotes and with more functionality. But you get to choose these things without actually having a technology team, and keep your costs and overheads low. But you're not differentiating. I take the point a bit about you can work with you guys to differentiate, but ultimately you've built the product to be much more broad in terms of its popularity. You're not doing it for a single entity. So when it comes to maybe more complicated markets like the UK, who don't use MetaQuotes, the clients here are not used to that. They're used to a much more kind of idiosyncratic platform, maybe a spread betting platform, multi-asset class, true multi-asset class. Then you need to either build your own, which I've worked at firms who have tried it, expensively failed, or use one that's been built, but again, you may be sharing it with somebody. So I do think that sort of evolution in technology, especially the use of AI in terms of coding, has enabled firms to keep their costs lower when developing their own applications. I wish Adam was here, because I employed Adam directly in the UK because of his focus on technology. Our UK business is absolutely technology at its core. And that's why I can say going forward that the whole group will have technology at its core.
Interesting. I mean, and do you see that reflected in the, so is it champagne outcomes, but beer level budgets? Because I still see that there's a little bit of growing up to do. If it's really driving the business, I think there should be some bigger money behind it. Personally, I just don't think we're there
Yeah,
yet.
absolutely. And that's what kind of my point about the sort of maturity of the business. A lot of firms start out with not the barest of capital, but just enough to get going. You need to have a good, pocket of money behind you to really, to fail.
Yeah.
Initially. And I guess that's the point we've got here. We know it's going to be a rocky path, but the future is not to be dependent for us as a broker. That said, partners can do some things much better than we'll ever do it. So to ignore that would be madness. It's a combination of the two.
Okay, excellent. Thanks. Well, moving on to question 3. So when risks emerge, because tech strategy and business strategy are not aligned, how do we kind of close those gaps? Maybe Tom, you want to kick that one off?
Yeah. So if there are risks in your technology, if there's something that it doesn't do that you need it to do, again, like I said earlier, working with your technology partner is the most important thing. But sometimes we'll have people coming to us and they will want to get something for almost no money, and they'll expect to get a Rolls-Royce solution for almost no money. And they must realize that we have costs that we have to build. We have lots of demand, and therefore, if you try and go in and you nickel and dime and get something really cheap, you're not going to get something that's going to solve your problem and get you the lowest risk. You're just not going to get it. So have an understanding when you're working with all of your technology partners as to their businesses too. And understand that they've got to make money and you've got to make money and sort of build things together. And I think if you take that approach and have a very open style of what you want to achieve, and you talk to the brokers, talk to the technology partners with their vision over the next year or two, then you get a really good solution, because then as a provider, we can build that into our platform as to what the brokers need, and you get what you want at the right sort of price.
John?
Yeah, I think we're at this stage of the market, it's important to reimagine technology as, rather than being a static set of solutions, being a creative environment that can grow and reflect the needs that you have at the time. So, there's a different kind of risk in the market, apart from financial and regulatory, and that is competition. So, in prop, is it a race to the bottom, for example? And if it is, then, if you've built a good customer base, then the next step is to diversify your markets, diversify the things that you're offering to your customers. So risk comes in many different forms. And if you have a static platform which is fixed and can't accommodate that, and you end up with 6 different platforms, then really your technology isn't meeting your needs. So I think, and similarly with back-end solutions, choice is really important, because things change continually, and so I think reimagining technology as something that evolves with you is a very important point in this stage of the market.
There's something I wanted to add on this one. Something I've just sort of thought of listening to what John's saying is that sometimes we see people building technology where they hope it's going to all work nicely. They hope it's all going to be fast, and they hope it's not going to fail. Whereas coming from an institutional background, you build technology with the assumption that it will fail. And what are you going to do in those instances when it does fail? So you build in systems like disaster recovery, you build in replication to backup systems right from the beginning, and you plan out what happens when this bit breaks, what happens when this bit breaks. So you have a plan. So you don't then just hope it's not going to break, because then you don't know what you're doing.
Continuing from Tom's point, as from the perspective of being the client, one of the criteria that the way that we pick our technology partners is that they're willing to be problem solvers for us, because once you have a big operation, then you need specific solutions, and you come up to all sort of risks or problems in the business, like competition and abusement and everything. And then we create our own solution ideation, and then we come up to our technology partners to work on that and create a dedicated solution.
I think that's an important point. And I think in summary, I think what we're saying is, I don't think either party knows, they know maybe the outcome that needs to be achieved. That's why we sit down and we talk about what it is we plan to do, and then we put a project in place to go about and put it in place. But, in reality, vendors don't understand everything that a vendor really wants to achieve or how they wants to achieve it. And by the way, the brokers typically don't understand how the technology helps them innovate. And maybe the technology, as it's deployed step by step, creates ideas, fuels different paths or directions that could be taken. And so in reality, you need to sort of co-create together, don't you? And having that sort of modular, configurable, less customization, but configurable approach, I think will help technology vendors respond better to those dynamic business needs, because ultimately the tech needs to align to the business strategy, not the other way around, right?
Yeah, I mean, one of the major problems, I think, across all financial services firms, including brokers, is the systems we use are legacy systems, right? The data that we have is disparate. It's kept in different silos. It's not combined together. And a lot of the work that goes into sort of providing services for us is to try and rationalize our data so it's more usable for example, RegTech. RegTech needs to know who the clients are, so it needs access to the CRM, it needs the trade and order data, it needs to bring it all together, tag it. And I think, firms that are thinking forward, I know that our team are building our own data lake to make sure that even the systems that we're having to use, the data is put into a centralized location. So that if we engage a partner or build something ourselves, it's taking all of the data and making it useful rather than a bit of it, and then trying to make it, work with our CRM. Or so it's this kind of data processing, this data parsing. That's a real skill, and I know there are some firms who are fabulous at it. But really, a lot of the businesses that have grown up around this industry have been trying to make MetaQuote's front end work with a load of back end properly. That's been a major source of, I'm sure, income for you, Tom, over the years. And MetaQuotes doesn't come with a support kit. It comes with its platform, and everyone else has to make it useful for their clients. So it's there's a lot of transformation going on. But actually, I in the last sort of, at least in the last 5 years, I think it's become much more kind of accessible for companies to do this themselves to an extent. The skill sets are there, the technology's there. We definitely still need help, but we think we can do things that we couldn't do maybe 10 years ago now.
And just on that, if I may ask you as a broker, a lot of brokers have historically over the past, 10 years or so, preferred to build their own in-house tech. I mean, it's just been the modus operandi for how you get stuff done. Are you seeing a shift in that changing to be much more open to dependency on third parties outside of just point solutions?
I think it largely depends on how much you failed to an extent, and how many stakeholders have put their names behind projects that haven't worked. I think it'd be crazy to just go blindly down one alley. We'll do ourselves. We're not taking third parties. I think a good technology team will look at solutions outside to see if they can make an improvement to what they're building to get there faster. I definitely think brokers are focusing on their own IP. They want their company to have their own tech. That does protect you to an extent in terms of MetaQuotes, for example, being taken off the app stores. That's a huge problem for a lot of brokers, and it's caused a migration into other platforms. So really, you feel safer if it's your tech, your in-house, your responsibility. But I don't think it's for risk purposes, you need other solutions. You need backups.
Yeah.
Yeah, I think there's obviously at the end of the day, a valuation argument for owning your own IP. But typically, something that might take 3 years to build and then ends up being fairly static is the other end of that risk.
Right.
You own your own IP, your valuation is arguably different. You feel secure. And I think, we obviously talk to a lot of brokers and props, some of whom are definitely their aspiration is to develop and own their own kit. But they may not have the flexibility to move with the changes in the market. And I think, the concept behind our web and mobile trader is put anything you want into it, put as many markets as you want into it, call it what you want, integrate it with any third-party tools. And I think that isn't where we started, but it became quickly clear to us that this was what was needed in this market. And I think in the next 5 years, as AI finds a true expression in this market, as opposed to a marketing expression, but when it finds its true expression in this market, I think everybody in this market is going to need to be considerably more flexible than they are in terms of how they see technology and see the way in which it needs to change to accommodate. So open environments, to my mind, are going to be the way forward. And it's more about abundance than scarcity.
Sure.
So scarcity, don't touch my model, don't mess with my platform. Abundance has got to be more embracing in this coming change, where the answer is, if you want to put something in this platform, you're welcome.
Sure. Sorry, Gil. Yeah.
I can say that from the client perspective, there's always a debate whether to develop yourself the solution or
Yeah.
to take best of breed approach, where you take and integrate all sort of best of breed solutions all together, and that's a challenge as well, because sometimes you would take solutions that your competitors have, or you have less capabilities to modify it to the way you want, rather to develop it in-house and deal with the consequences. And like you said, sometimes you don't have we don't have the time to return back to the solution and make it more updated. So there's always an internal debate, and that's if we want to take it on a risk perspective, that's there's risk for either approach.
If we look at an analogy in the car world, when cars first came out, a long time ago, I do like cars, yeah.
You like
When they
cars?
first came out, the big manufacturers made chassis and engines and all the running gear and everything, and then somebody else called a coach builder would build the bit that you see. They build the pretty bit. So the original sort of Rolls Royces and things, they different people built the front end, then built the sort of mechanics underneath to make it work. And I think that's quite a nice analogy here, because there's no point building your own liquidity connections to all of these LPs that I've done hundreds of times, because there is no competitive advantage in you building that yourself. It just it's used up your team that could be doing something that is specific to your needs. So find the bits that are common, that you can buy in, and buy those in, and the bits that really make a difference, build those bits yourself and focus on that.
I'm glad you see us as a Rolls Royce, Tom. Thank you.
And
But I think there's a
Yeah.
cost to flexibility and evolution, and the question is who bears that. And you can bear it internally if you're willing to, if you create with that in mind. But a lot of people don't. They create with a fixed idea, and then realize that the market's moved on and they need to move on. So it's an important question: who bears that cost?
Well, and we see it both ways, because at FinNext, yeah, we're easy to deploy out of the box. We can get a brand new broker up and running in a couple of days, and that's an appeal of a unified modular system. But once we do that for a couple of brokers, we very quickly get introduced to say, can you come and help us with all of this stuff we built in the past? Because that's not working too great. Seems like you got some stuff here that could help us. And actually, more of our business comes from helping upgrade and evolve your own investments, generally speaking. And we've grown on that tremendously. To my mind, it would be good if we could be part of the design phase a little ahead of the curve rather than coming in to fix it. But you get my point, right? And with that in mind, I mean, just maybe Matthew, to stay with you just for a second for question 4. So as tech, therefore, to Tom's point, is more of an enabler, more of a growth engine, more of how you take business forward to be different, to compete, to be unique. Do you then kind of think from a risk planning perspective, how does that play into how you conceive, how you build?
Yeah, I mean, when we think forward, whatever the risk be, whether it's regulatory, whether it's liquidity, market, technology now is a main frame of the conversation, right? It's either the solution for how we're going to manage it, or it's the thing that's causing us the issue. But whatever happens, is technology is at the absolute heart. Human error is actually one of the least problematic things we now focus on, because the humans don't do a lot of the processes. So yeah, absolutely. When we think forward, we think, okay, which new products are we going to offer? How are we going to monitor them for market abuse? How are we going to ensure that we're connected to the exchanges at the quickest possible speeds? And in that respect, I think Tom's absolutely right. I'm not going to look at my tech team and ask them to build the fastest bridge connection possible. And it's just pointless. There's bridge connectors out there, and they're brilliant, and they work great, and they've been tested to the max. So I think when we look forward, we look at what we can and can't do and assess risks in that respect.
Rest of the panel, what do you think?
Sorry.
You go.
Me. Oh, thank you. Thank you. Well, I think, technology is the fulcrum of risk in this business, really. And, everybody is required to keep reinventing themselves. And I think if there are entities in the marketplace that can handle that reinventing, then that's obviously a very functional part of the market. And the trade-off is, as we said before, whether you own the tech or whether you choose to evolve with reliable service providers. And the market seems to be moving that way.
Yeah, building in house it's difficult to get the focus on the right things. I do remember once I was CTO at a brokerage, and the CEO said to me, "What we've got 100 projects on the list, and I need you to do them all. They're all top priority." I said, "Well, I can't do them all. I've got a team that can do a certain number of them." He said, "Well, they're all highest priority." Okay, that doesn't really work. Whereas if we'd focused on the things that we needed to do, and other people, we brought other things in, and that's when I started Goldeye, because I realized there was a need for people to do these things.
Yeah, no, very good point. Very good point. Well, we got 4 minutes remaining, and we need to finish on time. So I'll go to the final question, and really, I'd like to hear from all of you if we can. So, if brokers want to fail faster or fail better, to be more successful in 2026, what should they do differently?
I think, if I just start quickly, I think they should be open to have much more interesting conversations with technology partners about ideas we've got, because we are not just software builders. We fundamentally understand the markets. That's different to an outsourced company that just builds software. We understand the markets because we've all been in the markets. So have an open conversation with us. If that's under NDA, fine, if that's what's needed. But have a really open conversation about what's needed, and we will be able to give you some really interesting ideas. We will also be able to hear what you need and build that into the platform.
Yeah, I agree with that, Tom. I think there's a tendency for brokers and props to look inward, and at the very least, getting ideas and inspiration from technology providers in the market without feeling that they're going to have a sales, thrust down their throats. It's good both ways, because we get ideas from our customers as well about what might work and what might not. It triggers things that we might have on the shelf and we've never done anything with. And, I think it's healthy both ways, and it should be more open and relaxed.
Jill?
Both industries, the brokers and prop, they face the same challenge. They're very common, leveling up the service, and there's a lot. You don't see much difference between the companies. Basically, the way you prefer a company over the other is based on reputation and trust and other means of. So it's not about the technology, because the technology is providing more or less the same for all. It's same for prop and brokers. So I think any company that would come up with a new approach for servicing, and then come to their technology partner and ask to develop this together in a collaboration, that will create a new and refreshing new ways to consume these services.
Thank you. Yeah, no, very important. Very important. Matthew, what do you think?
This feels more like a question for a technologist than me. Do I want to fail fast or better? I mean, I don't want to fail at all. But I take sort
You
of,
guys need the technology.
I'll take Tom's point at the beginning, which is this kind of the technologist perspective, which is the Elon Musk kind of fail quick and make some changes, and it really produces better results. What I would like from our technology team is not to be scared of failure, but also to make sure that they don't go down a rabbit hole whereby they haven't benchmarked the product against what's available in the market. As you say, have a conversation with a third party. Might not take their technology, but at least you know that what you're comparing it to. Are you going to spend months on something you don't need to build? That would really be frustrating from a sort of a board perspective, to hear the technology team didn't look at what's available in the market space and then fail. That would be a travesty. So I guess fail better.
Yeah, yeah.
I think fear of failure is a big thing. And, that saying, fail fast and fail forward is a mindset. It's the Silicon Valley thing.
Yeah.
It's a way of
Yeah.
operating.
Yeah.
And I think having more open conversations with partners without this fear of someone trying to sell you something. No, I mean seriously, it's the thing. You know, it's people. Oh, what do you do? Fintech. You know?
Yeah.
And it's like someone's going to try and sell me something. Actually, there's a lot more than that. You know, there's a conversation to be had, and it doesn't have to be heavy. It can be creative. So I'll see you later.
I'll put it out there. I think we need an operating system. That's what we need. We need a technology operating system that combines the capabilities of multiple vendors, but designed into, not bolted on, but designed into the way the brokerage wants to run and operate. And I think that's the way that you're going to get technology to really underpin the business strategy and have the agility, the flexibility, right, to pivot and adjust as you go along, because nobody knows it from the start to the end. We take journeys together, don't we? And I think that's how you can de-risk the future partnerships required, right? To ensure you don't have unmitigated failures and outages, breaches, and all the other stuff that keeps them up at night. But you have the ability to put a business strategy in place that sets you apart, differentiates you, and makes you a winning broker. And I think, or prop firm. So I think we need an operating system. And I think that's the next logical evolution of our space. Gentlemen, thank you. Great debate.
Thank you very
Good-
much.
Thank you
Good
very
comments
much.
and good dialogue. Thank you.